Good morning. Welcome to the Bitcoin Morning Brief. I'm Leah Wald, here with Tone Vase and Giacomo Zucco. I'm going to start off as an American. Oklahoma won, and therefore I'm still alive. Tone, how many beers did you have to drink? Because I don't think Oklahoma was in your bracket.
I think Oklahoma lost. You might be thinking about a different team.
No.
Oklahoma went to overtime and they lost.
No. No.
Sounds
I
like
was
Leah,
up also dancing.
so sounds like Leah had a fun night last night. It looked like they were gonna win.
Uh-oh. It could have been the margaritas, I'll
Well,
be honest.
how far did you have Oklahoma going? It couldn't have been more than one round. They were a 10 seed.
Okay, maybe I'm not going to answer that question. Moving over to Giacomo. Giacomo, just a question. You know, like I saw some different spellings yesterday about your name. Can you clarify this one?
Yeah, so there was like I wanted to see if your audience was aware and attent, and I said Jyacomo. It's not my name. It's Gyacomo. So yeah, you were very good at catching it. Also, I'm the only one in this call right now, which is very boring. And yesterday I was reading Bitcoin stuff instead of having parties. So I'm not worthy to be here. So nerdy.
And speaking of yesterday, the way the show ended, I was literally giving out the meaning of life, and I said, "Don't forget," and we got cut off.
It sounds like we all kind of need interventions. All right. All right, moving to the first stories here. Okay, hold on. Let me set it up. There we go. All right. So Israel bans crypto firms from Tel Aviv stock exchange indices. So Israel's security regulator has said that the cryptocurrency related firms may not be listed on the Tel Aviv stock exchange indices. I'm going to pull it up since there's a lot of fun chatter here. It's actually right here. This is going to be fun. So I have the original report, which was fun reading this morning. So the original report in Hebrew is actually really comprehensive. They're saying that they're also worried, and so this isn't in the CoinDesk report, about mutual funds and ETFs acquiring shares of these companies and indirectly exposing passive investors to trade in them. And they also specifically cite Bitcoin, Ether, as well as others. So they voice their concerns about Ether, right? Which was interesting. So I think that they're simply being cautious because they're confused and are worried about the sharp rise in share prices because they have real activities and want some time to study it. The restriction is mentioned that it's only for 1 year. So again, I don't think they're questioning the tech. They're questioning the listing of stocks that's causing the move in the securities. And I actually do think this is quite smart. Tone, you were concerned that the ignorance in the subcommittee hearing could endanger Bitcoin. But isn't it possible, as illustrated in the Israeli story, and I'll stop getting off Hebrew here, that regulators will eventually sort it out, leaving Bitcoin as king?
I mean, I have to agree with kind of what Israel's doing. Sort of. I'm looking at that report. I'm like, wow, it's so weird. Like looking at Hebrew, it's like completely like it looks like completely. It literally is backwards. Like I don't understand how you can read that, but awesome. But so I kind of agree with them. The one thing I didn't like in that is the fact that they already picked a date for like an end date for like a year, right? There shouldn't be a date. It should be open-ended. Like, okay, we're looking into it. For now, we're putting a ban on any company going public if they're in this space, because they see the space is very speculative. They also said we're also going to be very, very cautious and critical of any current companies that are publicly listed that are going to switch their operation to be a blockchain operation because of the fear that they're only doing it to boost the stock price. This is actually the job of the regulators, to create this fair market without, insider trading and without scams being listed on the market. This was the problem in the 90s, where anyone that had a .com in their name was able to go IPO, and boom, all of a sudden everybody's a millionaire. So this is the kind of stuff that nobody wants again, yet everybody in crypto wants that. So it's just, I find it all very frustrating. So I think they're looking at it correctly. They're just going to hold off on letting the public be involved in this and giving it a green light.
Yeah. Before quickly moving on, because I did find this hilarious, can you make a quick comment and explain what happened to Long Island iced tea going to Long Blockchain?
Right. I mean, that's exactly what it was. It was literally an iced tea company that, the C-level managers of that company decided to take a risk, a regulatory risk, that if they just change the name of their company to blockchain, maybe their stock will go up, 50 times, and they will cash out, and everything is fine. And they did. I mean, that's a risk that they took. I'm sure the SEC is going to take that seriously, and maybe somebody will go to prison for that, right? Or maybe somebody would get heavily fined for that. I don't know, but that's not that different than a company that's currently trading on the stock market decides to go ICO in order to, again, just get money from unqualified investors for nothing that they actually do fundamentally. So it's bad. And this is how things can get out of control. And most people in our space only see the dollar signs, and all they care about is getting rich, and they don't care about the technology. They don't understand the technology. All they're trying to do is get rich, and then they accuse people like me and Giacomo for not being open-minded enough and not understanding the technology, which is, like, again, the crazy part. It's such double speak. And it's only getting worse.
Right.
Any quick comment, Giacomo?
Well, as you know, Ton, I'm lead kind of compulsory regulation, because I think that in the long run, it will not increase awareness and attention in the clueless victim of scams, but it actually create more moral hazard. So I don't think that this is good news. But in the end, I think that anyway, serious stuff I mean, serious stuff in Bitcoin space is designed in order to survive regulatory crackdown. So it could be an interesting filter to see this kind of regulatory approach. So I'm not so concerned.
Right. Moving on to more regulation. Also very excited, Giacomo, to hear you speak more about tech in the last two articles that we have. This one is, this city just passed the first Bitcoin mining ban in the United States. So Plattsburgh, New York has imposed an 18-month moratorium on Bitcoin mining to prevent miners from using all the city's cheap electricity. So Plattsburgh boasts that they have the cheapest electricity in the world due to a hydroelectric dam on the St. Lawrence River, and residents pay only 4.5 cents per kilowatt hour. I believe the main points of the article are: 1, the residents are upset about the electricity bill and blaming it on the miners. 2, this is because the electricity bills are divided up equally by the citizens of the city. 3, finally, miners are saying that this shouldn't be a problem because they're saying that they'll pay the overages. So to me, there's a bit more to this story, because the miners are saying that they will pay those overages. But really, what does that mean? As this can be interpreted really differently. The only way the miners can be billed for the overages under the system is potentially to go back and create a baseline of what the electrical usage was before the miners did it, and therefore come up with some way for the miners to pay for this difference. But that's really complicated, right? Because even in the winters, electricity costs go up. Tone, how do you sort this out?
Yeah, so it was interesting. Like, the moment I saw that headline, I'm like, oh man, like, that headline looks very, very bad. But when you look at the details, I mean, this is the kind of headline conspiracy theorists like just run with. The government is preventing you from mining. But there's so many details in that story. So first of all, a person has to realize this is not that big of a town. It's a town with very cheap electricity because they have like a hydroelectric dam, which generates more electricity than the city needs on nice months. So during rough months, where more electricity is used, probably in the hot months during the summer because of air conditioning, and in the winter, it depends on how they're heating their homes. So during the rough months, they exhaust all of the electricity from the dam, and then the city needs to go out and purchase higher electricity from other places, and all of that gets distributed amongst the citizens. So when Bitcoin mining farms come in, and remember, this is specific to Bitcoin mining businesses. There was nothing in there about one guy running one or two miners in his own house. Okay, that is a different story. Though, if every single person in that town starts running one of those miners in their house, I mean, it's a hard call, because like that city probably doesn't have proper metering where they can actually bill each person completely individually, and then they bill each, let's say, X amount of land per 4.5 cents per kilowatt hour for like the first X amount of usage. And then after that, the price goes up, and it can go up and scale exponentially from there, or scale in a way where the more you use, the more you actually pay. So the thing, you can get this right. Basically, the perfect scenario is you exhaust all of the cheap energy, and then the rest of that energy that gets, you have to pay for from higher sources, that gets completely subsidized by the miners themselves. But we'll see what happens. And city employees, I'm sure the engineers in that electric grid know what they're doing, but these are complicated problems for government workers, because most of the smarter people, they're working in a private sector to get this right. So I'm a little worried that they need to get this right, because it's going to have a very good blueprint for the rest of these kinds of small cities. So let's see what happens. But yeah, you have to read the details of that story. If I see a conspiracy theorist run this is a government ban on mining in the US, that's absolutely crazy.
Right. I like the quote here: the moratorium affects only new commercial Bitcoin operations and will not affect companies that are already mining in the city. Giacomo, is there similar news stories coming out in Europe?
Not really. Right now in Europe, there is still I think they're still behind. I have some mining interest in Eastern Europe, and everything is fine right now. It's a honeymoon phase, as somebody would describe it. I think that what is interesting is that regulatory bans on mining are a case in which, while I personally and politically oppose any kind of ban, it's actually a good news, in my opinion, that there is some kind of adversarial pressure from governments, especially on mining. Like, if you think about it, mining as a part of the Bitcoin protocol was conceived to be pseudonymous, distributed, decentralized, not regulated or not regulable. While in the present situation, Bitcoin mining is super centralized, and these mining pool, they put their name on the blocks they discover. So everything is like super, let's say, already established and centralized. So I think that some kind of negative adversarial pressure over Bitcoin mining business can actually help the centralizing mining operation. Like, if you cannot build your open big mining business in next to the hydropower, but you can maybe disguise your little mining operation inside your energy consuming business. I mean, that's actually helpful for the decentralization of the hashing power overall. So any kind of negative regulatory pressure over mining, I think it can have healthy consequences on the Bitcoin ecosystem, paradoxically.
Interesting. On to other developments which have been supported by very interesting and powerful people. Let me move to the top. Lightning's first implementation is now in beta. Developers raised $2.5 million. Lightning Labs announced the first beta release of the Lightning software implementation, spearheaded by the development company. So I'm very impressed that they have such powerful and interesting investors, from Jack Dorsey, Charlie and Bill Lee, to Kevin Hartz and Vlad Tenev. It seems that people who have doubted the speed by which Lightning would come to market are being proved wrong, because they're already in beta and now they're testing it real time with influential backers. Giacomo, this seems inevitable.
Yeah. These are actually two news. The first news is finally we have a beta implementation in mainnet today. We already had the Blockstream C Lightning implementation, but it was not. It was like a hack in order to try to experiment in a reckless way, as they say it. But now we have an actual complete and reliable mainnet solution, which also one of them, from a technical point of view, one of the main things is that now it is compatible with Bitcoin Core as well, Bitcoin D, because until now, Lightning Network Daemon, LND, the software of Lightning Labs, was only compatible with a Go-based implementation BTCD, which is something that most of the Bitcoiners don't have at home. They don't have it synchronized. So many people couldn't try it because they didn't have this alternative implementation of Bitcoin. Well, right now you can use your LND in production in mainnet right now, kind of safely. Still, beta means that you still have to be careful. Beta means that some changes are still to be made, especially watchtowers and better routing, multi-routing. So a lot of science fiction sounding cool features are yet to come. But right now, you can finally open your Lightning node, route other people's payment, buy your coffees with Bitcoin, since it appears that in the last 3 years, the most important thing in the world was to buy coffee with Bitcoin. Okay, you can finally. And the second news is not, the second part of the news is not technical, but let's say more business related. With this release, we know that they are backed by very important and very strategic investors, and this is very interesting. Not just because these names are very big, but also because they are investing in a very strange and new business model, if you think about it. So Lightning Labs, this company with great people, Elizabeth Stark, Lalu, and great engineers, they are building an open source software that everybody can use openly. They are not going to sell anything, to sell the software, to sell licenses. It's open source, free to use. You don't have to pay in order to enter into the Lightning Network routing to the company. You just download it and you just use it. So why do you invest in this? You're investing in a new paradigm of investment, like Red Hat style. You invest in a company which is creating new standards, because they will know the standards better when all the ecosystem will rely on those. So from an investment point of view, it's very strange. I mean, they don't hold any kind of intellectual closed property. They don't hold any kind of closed ecosystem wallet garden. They're just helping an open source developments, which is fascinating.
Tone, how do you see the scalability and how the company will continue to develop, given that they have such brilliant, powerful, network-filled backers?
I'm hoping that they end up developing well. I'm actually going to throw a few questions at Giacomo, because he's more up to date on the technology here than I am. I've just been a fan of the technology because of the people that I know that are involved. Now, to be clear, like a lot of my audience is new. I mean, we have over 1,000 live viewers now. I know I picked up a lot of viewers. So people need to understand that Lightning and the company, Lightning Labs, has absolutely no connection to Blockstream, the shirt that I'm wearing. And Blockstream's implementation of Lightning is a different project than Lightning Labs' implementation of Lightning. So when people accuse Blockstream of pushing Lightning for their own personal gain, they're completely independent. In fact, they're going to both work. I mean, I'm hoping that the Blockstream's implementation of Lightning is fully compatible with Lightning Labs' implementation of Lightning, and they should be. So they are cooperating so that they're building something that is not, so that everything works together. But I don't know the people in Lightning Labs the way I know the people in Blockstream, but Giacomo, you seem to see it that the Lightning implementation is something you're more optimistic about from the technology side than the Blockstream one, correct?
Well, let's say that the Blockstream approach is more a research and development. Like Christian Decker is an excellent developer, and he is also working on something that could scale lighting even more, like channel factories and new technology. Rusty Russell is like he's a genius, and he optimized the lighting networks idea in different ways. So they are more, let's say, there are first of all, it's only two people inside Blockstream working on the sea lighting implementation, and that's another easy debunking of a theory, the conspiracy theory that Blockstream is trying to leverage lighting, block size, blah blah. So yeah, they have two people, very good people, and they are mostly doing some kind of advanced experimentation stuff. While and also they have other business models. They have the satellite, the liquid system, the element open projects, a lot of consultancy. So Blockstream is a complex beast with a lot of business streams. Lighting is just one thing they are trying to help in a way. While Lighting Labs and the other very important company, Eclair, Async, sorry, is the company which is developing Eclair in France. They are the third major player in the lighting protocol implementation. And they are basically doing the different implementation of the same interoperable standard, and they are more close to a production-ready final product for the users.
Giacomo, one last question. What do you believe that the important milestones will be that they need to hit within their roadmap to prove viability within this beta launch?
I think that we will not really see the system until we have some kind of mobile wallet that not tech guys can use. Right now, tech guys are installing sea lighting or Eclair or R&D or the new Rust-based lighting solution from Chain Labs. That's another interesting stuff. The Rust implementation one. Guys are experimenting with that, but we will see people actually having troubles, facing the first challenges, UX challenges, efficiency challenges, routing problems, when we will have mobile apps on Android and iPhone that normies will start to try to use. So I know that Lighting Labs is very close to the release of Neutrino, the mobile app with better kind of security, but I think that's a step that you have to see in order to assess the development of the new protocol.
Hey, Giacomo, I have one more question for you, and I know like all our viewers want to get to the price, but maybe they don't realize how important this is. I see this as literally the most important project in all of crypto, probably more important than everything else in all of crypto combined. I see this Lightning as it has to be, because if Lightning doesn't work, then this crypto thing will not scale. So I see this as like the more important than everything else combined. So the thing is, with this beta release, every Lightning channel had to settle and close in order to use the new beta release. Is this something that's a one-time thing, you think, or is this something that may have to happen again? Because I can see that being problematic.
No, I think that it's mostly one time. The problem is timing with the interoperable protocol, Bolt protocol. So they reached the finality with the Bolt 1.0, but then sea lighting was brought in production a little bit. I mean, I think that that's an adjustment for now. I agree with you that in the long run, lighting is probably the most important project in Bitcoin right now, because it has incredible consequences in user experience. Like the blockchain, it's cool because it allows us to be without a central counterparty, but the blockchain sucks for normal payment experience, because you have your payment recorded forever for everyone. So it sucks for privacy, and it sucks for scalability. Also, it sucks for, this is more related to your question, to upgrade Bitcoin is difficult, because you actually have to change the consensus model. So it's a very traumatic experience to try to upgrade Bitcoin, as we have seen. While to upgrade Lightning, in the worst case scenario, you have to shut down and reopen the channel. But is orders of magnitude less traumatic than changing the consensus layer of Bitcoin. So even the evolutions that we will see on Lightning, I think most of the times from now on will be backward compatible. But even when it's not, you can just phase out the old channels in 2 years and open the new channels in the new way. So it's a way easier to update the Lightning layer than to update the underlying consensus layer.
Tone, 2.5 million really isn't much, and we know these investors have the money. Won't they need more?
I don't know. This is the thing, right? Like, hey, quick thing for now. I know that nobody at Lightning Labs even considered ICOing. You agree with that, Giacomo?
Yeah, I do. I think that you can see a linear correlation between how good your developers and engineers are and how are they distant from selling scammy tokens or some shady platform. Yeah.
Right. So basically, they knew exactly how much money they needed for X amount of runway to get something done. And that's exactly what they asked, because in the real world, not in the ICO world, you get the amount of money you need and you give up X amount for that. If they got more money, they would have potentially had to give up a little bit more to the investors. Okay. And in this case, I'm not sure there was anything they're actually giving up to the investors. I don't know the details of the deal, but a lot of people need this to work, because guess what? If you're one of these guys that is sitting on, 10, 20 million dollars in Bitcoin, you want that 10 or 20 million in Bitcoin to be worth 100, 200 million in just Bitcoin from Bitcoin's value going up. And the best thing you can do for that value is have Bitcoin scale to buy those cups of coffee seamlessly. So you are incentivized to put money into this project just from your net worth becoming more valuable. So again, we have to end it with these conspiracy theories that that they're going to collect money and give them to these investors. That's probably not going to be true. There's other ways to profit from donating to this project, especially when you know how competent the team is. So I'm happy that they only got 2.5 million, because I know what they're not doing with that money. They're not partying in Vegas this weekend.
True. Agreed with you, Tone. And because I do think this is absolutely going to be fabulous. If they're smart, they're doing a convertible note. So we'll see just how much money they're going to make off this. Now, Tone, onto this shirt that you're wearing. Blockstream. Liquid Release Candidate Network is ready to go. So last week, Blockstream launched the Liquid Release Candidate Network for participating Liquid exchanges. Liquid offers traders the opportunity to rapidly, securely, and confidentially move Bitcoins between member exchanges with a transaction finality of less than 2 minutes. Giacomo, what are the most important features to note in this development?
So the most important features right now are just concerning exchanges. So our easy liquidity for arbitrage, and that's would have a good effects on the price stability, because arbitrage between main exchanges could be made easier by this new product. But also security of exchanges can change, can have some kind of paradigm shift, because you can actually have exchanges that are a little bit less custodial, let's say. The security of the funds is not anymore relying only on the specific security model of the exchange. So we can have market benefits on liquidity-wise, and we can have security benefits in the overall ecosystem. One thing which is interesting, of course, we will see it better when Liquid will go live probably in May. We will see if it has some consequences. But Liquid right now, since it's easier to update than Bitcoin mainnet, because it's a sidechain, so they can do whatever they want with it with low risk. They enabled a feature which is called confidential assets, and basically you can move Bitcoin without the kind of traceability and the loss of privacy and loss of fungibility that that concerns the main net, which is very interesting from the fungibility perspective. And also you can issue assets and transfer assets in a private and not traceable way, and pretty much scalable way, because it's a federated system. It's not really a blockchain in a strict sense. So what this means is that maybe we can have finally a platform which is alternative to the very, very bad designed ERC20 Ethereum standard, in order to issue and transfer digital collectibles. So as much as I don't think that there is right now a significant serious use of these kind of assets, because they are just used for scammy ICOs and these tokens representing nothing, but still there is definitely an interesting research a space for research and development about scarce digital transferable interoperable assets. Right now, people that want to experiment with this stuff, they are stuck with Ethereum, which for many reasons is a very bad choice from a technical point of view. We could see maybe people starting to issue and transmit digital collectibles with different degrees of meaning. It could also be scammy ICOs, of course, on a functional, private, fast Bitcoin sidechain, which could be interesting to see.
Tone, in your seminar, you told me that you don't play with arbitrage just because it bores you. But can you comment on the benefits for everybody else that does like arbitrage and how this is going to help?
Sure. This is probably going to close arbitrage faster. So right now, while the future implications of this could be big, at the moment, it really just functions between exchanges to help facilitate Bitcoin trading. Because as we know, prices of Bitcoin on different exchanges are very, very different. And one guy can strategically crash Bitcoin on one exchange, causing panic in the others. So if this is utilized between exchanges, then traders will actually get liquidity from other exchanges very, very quickly. And this could potentially help significantly anyone trying to crash a single exchange for their advantage, or prices going up unreasonably on a single exchange. So the moment a Bitcoin starts, if someone wants to blow through the order book on, say, I don't know, GDAX, GDAX would be able to instantly source Bitcoin from another exchange. So there could be good consequences here, and we will see where it goes. But so far it looks pretty good. Let's see how the beta goes. I like the fact that they put in a fail-safe where if something goes catastrophically wrong, there is some kind of, again, I don't know the tech behind it, but there is a way to get your Bitcoin back into the hands of the original owners of that Bitcoin while it's in a sidechain. And this sidechain does not require mining, and the signers are the trusted nodes in that sidechain, which is the exchanges themselves that are participating. And I'm pretty sure Blockstream did it as responsibly as possible. There were talks in the beginning about how this box would be secured by thermite. I don't know if that's if that's how they're doing it. I think they found a nice problematic way to secure the Bitcoin. So we will see. The video is very, very useful in that article, but way more technical use is gonna come out of it, and it's using confidential transactions inside of it. So your payments inside this private sidechain, not even that private, but they're very obscure, and you don't really know who's sending what to who. So that's another example of, let's see how that technology is working out.
Giacomo, one last question. What do you see as the difference or relationship with the previous news about Lightning? And specifically, are they the same or in conflict or redundant?
Well, yeah, there is a lot of confusion about this. Many people in the general news, they tend to conflate or confuse Lightning with a sidechain. So Lightning Network is a sidechain, or Liquid is like Lightning Network. They are two very, very different things. So Lightning Network is something that is mainly useful for small and fast payments, while this stuff is actually useful for also huge quantities of Bitcoin. And this is the Lightning Network is not technically a sidechain at all. There are two very different concepts. Actually, Liquid sidechain can and will use Lightning Network in order to function better, because the transmission of Bitcoin from the Bitcoin mainnet to the Liquid sidechain and the other way around is by definition very slow, because it has to be secure, so it's very slow. So Lightning on top of the Bitcoin net main chain and on top of Lightning can actually help to get in and out very, very fast without have to peg and unpeg new Bitcoin. So they are not just not similar as technical solution, but they are complementary in many ways. Actually, Liquid does need Lightning to work properly and effectively, and Lightning needed a sidechain, not Liquid at that time, but it was Elements Alpha sidechain, was used in order to experiment SegWit, which is necessary for Lightning. So there is a good complementary relationship between sidechains research and Lightning research.
And I will add to that and say not all sidechains are created equal, because this particular sidechain requires no mining, while a sidechain like drive chains or lots of other ideas require the concept of merge mining, which I still fully don't even understand. So even just because you hear a sidechain, they could mean like completely different things, where one is like voluntarily implemented, and the other one requires soft forks and maybe even hard forks. They're nowhere near the same.
Yeah, absolutely, absolutely. The one difference that basically the federated sidechain like Liquid or RSK are basically easy to do. Well, it's not easy, but they are possible to do now without any kind of change into the Bitcoin protocol. They are more safe and more secure, but they could be easier to censor. So it could be easy for a regulatory crackdown on Liquid could be feasible in the maybe in the future. While the merge mined deterministic sidechain like drive chain and others, they could be less safe, and they could require big modification on the Bitcoin protocol, but they could be more censorship resistant. So there are trade-offs between the two ideas.
So regarding trading, Tone, price is bouncing for the third day off support and is now at 8,400. The hell is going on?
Yeah, that's once again we've had a interesting couple of days, and let's get into the price finally, right? Everyone's been on edge here. So the weekly chart, you're looking at it right here. The weekly chart is still look, no matter how the week ends, this week had almost no way of being bullish. The only way this week was going to be bullish is if we close and trade higher than last week. And last week, the high was 11,700, and the close was, and the open was like 11,500, right? So the only way this week was going to be bullish on a weekly level was if we close in the vicinity of 12,000. So that was a very long shot. This week would have been bearish for me if we would have closed the week below my number 7,600, which I've been talking about since October. So anything in between, no matter where it closes between 7,600 and 12,000, I'm gonna stay the weekly long-term view on Bitcoin is completely neutral, and we can still go to new lows or go to new highs this year. So what do I need this week's close in order to be bullish? I would need the wick to be longer than the body. That would give me some minor thoughts of being of starting to go bullish into next week. So we would need a close above even above current prices, like closer to the $9,000 level is where I would want to see that. if we close below 8,300, that would be very bad. And above 9,000 would start to be bullish. So I am looking optimistic, but the daily chart is where it's at, because as you can see, the current day, we're already halfway into the current day. Yesterday did close as a reversal candle. I like the fact that it closed, that it was an aggressive 13 candle with a green arrow. I have been saying, even during the testing of this latest code, when I was showing it, but no clients had the code, that the aggressives have been very good in Bitcoin, way better than the other types of 13s. There's 3 types of 13s. This is an A13. Those have been better timing mechanisms. I also like the fact that we bounced off of double support. I had this horizontal line of 7,600. I've had this line here for like 3 to 4 months, and this symmetric triangle that we have been working on. So it was good. We also bounced off of a 9, but I needed that reversal candle. So the daily chart is bullish, but you still have to be careful because the resistance is once again massive. According to traditional trading, you would, all right, why can't I do this? There it is. According to traditional trading, you can start, a person would potentially enter their bullish trade as of the break of the reversal candle. And this is a good reversal candle. The volume was fairly strong. It was coming off a downtrend. It was coming off support. It's great. Now, your initial stop loss needs to be below the swing low. You have to give this some room. And then if this thing pops all the way to 9,100, 9,200, you then raise your stop loss above break even. But right now, I am fairly bullish on the price of Bitcoin based on daily charts and how far am I expecting it to go? Well, at the least, I'm actually expecting it to go into the depth cross, and potentially we can go all the way to the declining trend line. But after that, I think it's going to struggle. I don't think there's nothing here that tells me we are ready for 12,000. All this tells me is that we are probably ready for 9,500, maybe even as high as 10,000, but that could cause some potential issues, and then we go back down. So let's see if we continue to get stuck in the symmetric triangle until an eventual breakout. The short-term charts are fairly neutral. We did have a reversal candle on a 4-hour chart, and we didn't make it to the 9, but that's okay. We're now still flipping back and forth with color, so nothing there. We're coming into the 50-period moving average, which on the 4-hour isn't all that critical, and not much really on the 4-hour chart. Let's look at the 1-hour chart, and the 1-hour chart is, again, it kind of got stuck here. Once again, I like what the aggressive 13s are doing. Definitely helps you potentially get in on this. And I don't like seeing giant candles with a 1 on them, but once you went above this 50-period moving average on the 1-hour, which I find to be a lot more useful than the 50-period moving average on the 4-hour. Again, traditional trading, and look at this big candle here. Huge pop last hour. Actually, last hour just ended a minute ago. And if you were a traditional trader, right there, you were starting break away from the 50-period moving average, and it was looking good. One quick look at the 12-hour chart, because the 12-hour chart has been useful in the past. And let me make these candles a little bit bigger. And once again, the aggressive 13 with a 9 gave you a bit of a bounce. We did make a slightly lower low, and now we're starting to reverse. But the 12-hour chart, next 12-hour period, which begins, I'm on UTC time, so the next 12-hour period actually is not going to begin for another 9 hours. So at the end of the day, so if the next 12-hour period starts trading higher than the current 12-hour period, that's another bullish sign. So we do have a lot of bullish signs right now. I think this is a tradable bounce, but remember, this is still a bounce. We are still in a daily symmetric triangle consolidation at best, and that's how I'm still looking at it, and neutral on long-term views.
All right. Well, let's see what happens Sunday on that weekly chart. Thanks, Giacomo. Thanks, World Crypto Network. Have an amazing weekend, everybody, and good luck trading.
Audio podcast. Check it out. World Crypto Network.
Bye. Thank you.